Lawrence LEPARD. Thank you, Larry, for joining. I think we're going to have a great conversation.
Yeah, thanks, Luke. I always look forward to talking to you, so it should be fun.
Well, thanks. That means a lot. Yeah, we have a lot to catch up on.
Yeah.
So for those that don't know, the two people watching this, maybe they don't know, Larry LEPARD is a former investment manager, a gold bug for many years, and now a Bitcoin bug for many years. First found Bitcoin with what? It was $300 or
yeah, 400. Yeah,
$400. And anyway, kind of like me, we go to these conferences and keep running into each other. But we have things to talk about today. Because in today's video, we are going to talk about your book, The Big Print, but we're also going to talk about more time-sensitive things.
The markets.
The markets.
Yeah, there's a lot going on.
The Trump tariffs. Howard Lutnick is, we have the new strategic reserve. We have the Loomis bill with 1 million coins. And of course, everyone wants to know about the tariffs. Larry, are the tariffs going to kill Bitcoin?
Well, the tariffs are not going to kill Bitcoin. In fact, the tariffs are going to drive a lot of things that are going to help Bitcoin enormously over a longer period of time. But the tariffs are a very complicated issue, and there's good news and bad news, right? So I don't know. I'll try and break a little bit of that down. I mean, so we've been in post World War II in the Bretton Woods monetary structure, which is now very, very obviously broken. We've been in a world where the U.S. has been the major exporter of one thing, the printed dollar, and we've been the major importer of lots of other things, goods and services from other countries, and that has hollowed out our manufacturing base. That has led to a strong dollar. That has exported a lot of our inflation overseas, and that has allowed the U.S. to live beyond its means. And the social implications of hollowing out that manufacturing base have been bad. I mean, my book talks about this, how we have a lot of deaths of despair, and the working class and average American has suffered under this system. And yet wealthy Americans and the people who've been able to play the fiat game have done very well under this system. And, that's just a fact. And President Trump was elected, and I'm glad he was, so much better than the alternative. And he said, we're going to turn this on its head. This is not going to be the way we want to run the country on a go-forward basis. We want to bring manufacturing back. We don't want to be financially driven the way we have been. And I think they're subtly arguing that they want to go toward a neutral reserve currency. And the two obvious choices are Bitcoin and gold. And so it's really not, business as usual in terms of the U.S. and the world economic system. And so Trump is a disruptor. He's a negotiator, and he's taken a very strong view that other countries have traded unfairly with us, and as a result of that, he's put a lot of tariffs into place, and the markets didn't like it. He announced it Thursday afternoon, and we had one of the largest declines, in the stock market ever.
It was
in terms of absolute points. I think it was largest, right?
I believe. Well, of course, in absolute points, it was, and it was the best. It was in percentage terms, it was the worst in the last 5 years, I believe. So it was a very.
I think
bad
that's right. I think we hadn't seen anything like COVID, and it actually yesterday kind of felt a little bit like 2008 to me. I kind of had a similar vibe, just like
2008 great financial crisis.
Yeah, similar vibe. Like, oh my God, stuff is breaking all over the place. I mean, to see major indices down 5%, 6%, 7%.
Right. And can we explain real quick, for those watching that may not be quite as familiar, like why is that so awful, right? Trump's saying tariffs are good, right? Why are the tariffs like having one of the worst impacts on the stocks in history, right?
Yeah. So let's connect the dots there. I mean, so tariffs, first of all, tariffs will increase the price of everything that the U.S. brings in, and maybe arguably, since they're going to be reciprocal tariffs, we just saw this morning, China came back and said, okay, fine, we're going to tariff you as well. This is going to slow down global trade. And look, if you go back to the history of economics, David Ricardo came out with the theory of competitive advantage, which said that you should let countries do what they do best and then trade with one another, and that everyone's living standard is higher as a result of that process. And he's right. I mean, there are certain countries that are suited to do certain things, they should do them. Having said that, if trade is unfair, if it's one way, and if there's not a level playing field in the trade world, well, then even the Ricardian theory isn't necessarily that good, and it does break down. And I think what Trump has identified is that we've been treated poorly, and the trade has been unfair, and he's determined to put an end to that. And even if the shorter term implications of that are not particularly good for the stock market or perhaps even the economy. And there's going to be pain associated with a system that, in my view, has gone on far too long and has really created a bubble in stocks. And I've said this in other podcasts, I strongly believe it, that I think most people who are in the stock market today, many people who are in the stock market today, do not fully understand and appreciate the risk in the stock market. And the reason I say there's a lot of risk is the valuation levels, again, there's some charts in the book that lay this out, are at extremes. I mean, the stock market, using a couple different measures, is more overvalued than it was in 29. We all know that what that led to, an 82% crash. And it's more overvalued than it was in 2000. And that led to an 80% crash in the NASDAQ and 50% crash in the S&P 500. And so, typically the stock market, wavers between being overvalued and being undervalued. Well, in that scale of things, it's very much on the overvalued side. It was a pricing in perfection and kind of continued strong economic performance. And when you put tariffs in, that's throwing a wrench in the works. And my sense is that, Trump knew that, and he's not stupid. His Treasury Secretary Bessent is not stupid. And they knew this would happen. They even kind of tried to foreshadow and warn of it. And if you think about it, yes, it's going to hurt people who own stocks. But frankly, a lot of the people who voted for Trump don't own stocks. If you look at the composite of the United States stock market, as we know, well, first of all, the top 1% of the country own 92% of the wealth. Okay, so and that's in my book, and that's why I think America is broken. It's just so out of balance. This financialization has allowed the quintillionaire and the wealthy class that knows how to game inflation. It's just allowed them to benefit very unproportionately to the value that they add. They've gotten just wealthy as can be as a result of a system set up to protect them and give them an advantage. So given that, Trump realizes that, and even though he's a billionaire himself, he wants what's best for all Americans, and so he recognizes that to do so, he's got to level the playing field. And by the way, that means that some of those assets that those wealthy people hold, they're going to go down in value, and there's no avoiding that pain of that stock market being overvalued and coming in a decent amount, which it started to do. And frankly, I think it has a lot further to go. But I think the outcome of all of this is going to be kind of a reordering of the financial system and a trend away from the dollar as the world's reserve currency and something that we can print and force other countries to accept, and a move toward neutral reserve currencies, the two natural ones being gold and silver, or gold and Bitcoin. And so, it's going to be chaotic and it's going to be painful. And I think for those who think that Trump is just negotiating and he's going to back off, I would say, not so fast. That it's possible that there's some of that in his behavior, but I don't think he's kidding around. I think he's serious about this restructuring. I think Bessent is as well. If you listen to all he said in the last couple of years, and particularly last year, he said that a monetary restructuring is necessary, something like Bretton Woods, which was the last big monetary conference. And in that restructuring, I want to be at the table. Well, guess what? He's at the table.
He did say that.
He did say that. And here we are.
Yep.
And so, what does that mean? Just big picture, boil it down to the quick answer. It's incredibly positive for the value of gold and the value of Bitcoin. Incredibly positive, because they are the only two alternative choices to a fiat dollar-based reserve currency. And so, and by the way, the markets are saying that. I mean, yesterday the stock markets were down 7%. Gold was, for most of the day, it varied a little bit, but generally speaking, it was up. Today it's down. But I mean, again, nothing in the order of magnitude of the overall market moves. The equity markets are getting hammered, and gold and Bitcoin have actually hung in there. And Bitcoin, in fact, I just saw a chart this morning that my partner sent me that showed Bitcoin is really starting to separate from the stock indices. I mean, a lot of people had said in the past, well, Bitcoin's just a proxy for the triple Q. It's a risk-on trade, and everybody buys it, when they think when there's more liquidity and the triple Qs are going up. Well, not yesterday.
Right.
Triple Q got hammered yesterday.
Yeah. For those who don't know, that basically that means that Bitcoin's tracking the high risk tech stocks, right?
Exactly.
It's just like a high risk tech stock with all these multiples. Right?
Exactly. And Bitcoin was flat to slightly down, and the triple Qs were down quite a bit. So
it's something I posted yesterday. I don't know if you saw it, but that back in 2020, 5 years ago, when stocks fell 5%, Bitcoin fell 20%. Now in the stocks, 5 years later, 5% Bitcoin's falling 5%. Then 5 years from now, they'll fall 5% Bitcoin and go up.
Well, I think that's right. I mean, I think it's absolutely right. I mean, people are going to come to understand that Bitcoin is digital gold, and gold and the stock market are very uncorrelated, which is to say, when the stock market goes down, gold goes up, and vice versa. And and that's a relationship that goes back decades, and you can see many market cycles that prove that. And so, gold is the old-fashioned form of sound money, analog, and it's going to become out of date over time. Bitcoin is the new version. Obviously, it's digital gold, but it's not entirely behaving like digital gold. It's starting to, but until recently, it was behaving more like a tech stock, a risk-on, aggressive asset for people to hold. Mm-hmm. But that perception, in my belief, is now in the process of changing. And I think with the next big print, it's going to change in a big way. Then we're going to see what we saw. The book is titled The Big Print. There have been two big prints already. One was in 2020. One was in 2008. There's another one coming. One of the things that you saw, particularly in the 2020 example, less so in the 2008. Well, 2008, Bitcoin didn't exist, but you saw it with gold. But in the 2020 example, one of the things you saw is when the big print came, initially in the downturn, when everything was falling apart, all the correlations went to one. So stocks went down, gold went down, Bitcoin went down, okay? But when Powell came in that Monday morning early with his bazooka and said, we're going to do whatever it takes, swap lines, print, trillions and trillions of dollars, et cetera, gold and Bitcoin took off like scalded dogs. I mean, they were up massively.
Bitcoin went from 5,000 to 50,000.
Correct. And gold went from, 1,300 or so to, to 20 to 2,000. So a big bump. So
and our new starting line is 80,000, not 5,000.
Exactly. That's exactly right. And so, it's the last time it did a 10 bagger. And yeah, it depends on where you want to count the beginning of this bull market. But yes, Bitcoin's going to go up multiples of where it is today.
Hey everybody, Luke Broyles here, our friend Larry LEPARD, and of course, Jerome Powell. Now, Jerome Powell is a cardboard cutout, not actually here, but Larry and I are going to be in person at Camp Nakamoto in October 2025. So, Larry, do you want to share your words on why you're looking forward to it?
I'm really looking forward. It's a great event. It's outdoors. It's in New Hampshire. The weather will be good at that time of year. New England's beautiful. So everyone who can break away and come should try and do so.
Yeah. So join. It's going to be a few days. You'll be able to either be in a hotel or in a camp setting, log cabin, camping, whatever you want. So no matter your preference. Larry's going to be there. Natalie Brunell's going to be there. Mark Moss, James Lavish, lots of awesome Bitcoiners and lots of other people that aren't on camera as much, but are equally as awesome. So if you want to make new friends, make new business connections, and most importantly, new memories.
Jerome will not
be there. There might be a cardboard cutout, but there might.
And that's a good thing.
Right, that's a good thing. But yeah, okay. Thank you, everyone. Get your tickets in the information link in the description below, or reach out to the whatever on the screen. And hope to see you there. There's only 150 spots there, and most of them are selling out pretty quick. So hope to see you there in October. Thanks. So I want to talk about the big print. I want to talk about stable coins and all those things because I think long-term those are very important.
Sure.
But first,
let's stay on the economy.
Yeah, but first I want to finish up with the tariffs conversation because a lot of people would look at this, Larry, and say, well, Larry, one worldview, one frame of argument would be, free trade is good, slowing down global trade is bad. Obviously, the corruption's bad, but this is going to wreck the economy. Some people would say this is inflationary. Other people would say this is deflationary. It's like it's worse than the Smoot-Hawley tariffs. This is like pre-Great Depression level kind of economic craziness. What would you say? What do you think is going to be the midterm justification to then lead us to that big print? Is it going to be deflation, inflation? What do you think is going to happen?
Yeah, boy, I'm not smart enough to necessarily know, and I've got my eyes open to all the possibilities. Okay, certainly, I think in general, on balance, tariffs are inflationary. It's a tax. It increases the cost of goods and services. There was a UBS report that I retweeted this morning that said, based on these tariffs, our new model for go-forward inflation is 5 or 6%, which is well above the 3% we're at now and the 2% target that the Fed has. And I don't see how increasing the cost of goods and services is anything but inflationary. Although inflation, generally speaking, is driven by the money supply, it can also be driven by the taxes on goods and services in the shorter run.
And it depends on your definition. Are you saying inflation in terms of prices, or are you saying inflation in the monetary supply?
Well, right? That's correct.
Yeah, that's
correct. But keep in mind that we measure it in terms of prices with a CPI, and that's what the Fed responds to. Longer term, there are things that could make it, It's very tough to tease out exactly how this is going to go. But Luke, I think it's very safe to say that this will not be received well by the stock market. And I think the stock market will continue to go down. The stock market going down, the last couple of times it's gone down significantly, leads to lower tax receipts and then higher unemployment benefits needing to be paid. And that leads to a larger deficit, which all feeds in to, again, the problem described in the book, which is, Lynn Alden's meme, nothing stops this train. We are in a debt doom loop based on the fact that we cannot control our government spending. That's the underlying problem. And to Trump's great credit, they established Doge, and they are trying hard, and they found a lot of waste and excess, and that's great. But those who say that, Elon, and Elon has always had very big visions, big projections. That's how he achieves what he achieves. But sometimes he's unrealistic on his timeframes. I mean, in 2018, we were going to have self-driving cars and buy a Tesla and run it as a taxi. Well, we didn't. But honestly, I rode in a Tesla. My partner has a Tesla. I rode in it recently, and we said, take us to Boston. And it drove us there flawlessly. I was stunned. I mean, self-driving is real now. So I do think over time, Doge could work. But in the shorter run, they're going to have a very hard time cutting back the expenses that they've got. 80% of the expenses are in, Medicare, Social Security, defense, and interest. And so, unless you want to go whack those 40%, which I think would be, there'd be a political uprising the next day from all the Social Security recipients, you got a real problem. And, it's going to be hard to balance the budget. So given that it's hard to balance the budget, we're going to need to sell more debt. And, the one thing that did happen yesterday that was in Bissent in Trump's favor is that the stock market getting hammered, there was a real bid in the 10-year. And people were willing to buy the debt, and the 10-year interest rate went from the 4.3, 4.4 area down to 4. I think it's below 4 now, right?
Oh, really?
Yeah, just this morning I saw it was like 3.98 or something. So that's good. I happen to think that people buying that debt are insane.
Yeah.
But it makes sense. I mean, if you're risk off and you don't want to own the stock market, and you do believe we are going to go into a deflationary downturn, then owning fixed rate debt that's money good. And I believe the United States debt will always be money good as long as we have a printing press. I mean, money good meaning that you will get paid it back. Now, whether or not it'll have the value you think it'll have, that's an entirely different matter.
You'll get paid the dollar amount, but not the same purchasing power.
That's exactly right. And so what's, in my view, there's so many moving pieces. It's really, really hard to tell, Luke. But I believe that at some point they are going to be forced to start to aggressively monetize the debt. The history of these downturns is, the Fed has a dual mandate, which is, no inflation, although they define that as 2%, and full employment. And right now, Powell's been trying to be Volcker, and he's been focused on the inflation piece of it. And he's done a job where he's brought it from 9% down to 3%. They're not near their 2%. And in fact, I think they're higher than their 3%, but that's because they lie with us. Just to leave that aside, I think there will come a time, probably not too far away from now, where they will say to themselves, yeah, this inflation thing, it's good enough for government work. And with a slowdown in the economy, we don't really see inflationary pressures. We need to focus on the employment side of our mandate, because the stock market crash and the reduced wealth is going to cause unemployment, and so we need to start cutting rates aggressively, and that'll eventually get us back to zero, and it'll eventually get us back to QE. And of course, that's money printing. And then when gold and Bitcoin see that, they're going to take off like scalded dogs again, because they're going to say, oh, we know how this ends. And so the Fed is really kind of trapped between an inflationary problem that they haven't solved, yet a downturn that will be deflationary, and arguably terribly so if they don't loosen up on the money. And so that's really the crux of the matter, that they're in this bad position where they will have to do another big print. The issue that's tricky is the timing on this, and the who does what move when, and so there's a lot of volatility. And I was saying to somebody the other day, in the investing world, you've got to know what you own. You got to know why you own it. And you've got to be willing to understand that it can go against you in a 6 month or 3 month or a 1 year even time frame. But in the longer run, you've got to understand the underlying trend, which is that they will print money to keep the system going. That's the book. There's in my mind, there's very, very low probability of that, because keeping the system going is a higher priority than fighting inflation.
Right. Yeah, I think a lot of the news cycle, especially in mainstream news, focuses on kind of like the personal dynamics and like the short-term day, week, month kind of relationships, right? You have Bissent, Musk, Trump, and everyone's speculating, well, maybe Trump is actually doing the tariffs for that reason. And maybe Bissent is trying to force Powell's hand, right? I think it's how a lot of the news goes, but I think that's what you just said there is really important, that if you zoom out, no matter who's trying to force whose hand or who's real and just whatever, at the end of the day, we have to keep stock prices up, and we have to keep real estate prices up in nominal terms, because if we don't do that, tax receipts fall, and that balloons the debt side of the equation.
That's exactly right. That's exactly right. And by the way, the having to keep stock prices up, it's going to be really hard to do with a market that's extremely overvalued. And the other thing to keep in mind is, and I just don't, I mean, everyone who had economics 101 understands credit cycles and understands the multiplier effect on the upside. You know,
Right.
when you borrow some money, you buy something, the person who produced that something adds capacity to create more. Somebody else gets a job, they borrow money. And it works, it's a reflexive cycle that makes a credit cycle cause things to grow. The flip side of that is when it gets too large and the underlying stimulus ends, it does the same thing in reverse. And so things I've seen recently that really kind of shocked me. The top 10% of this country accounts for about 50% of the spending. So, and the top 10% of this country has been doing okay because they have assets and they have stocks and the economy is okay and they have a job and so on and so forth. Well, all right, fine. But what happens, and the boomers have a lot of accumulated wealth. What happens when the stock market, and the top 10%, by the way, owns a vast majority of the stocks. So what happens when those stocks go down 40 or 50%? I'll tell you what happens. That top 10% says, yeah, maybe we don't need that extra car. Maybe we don't need that vacation. Maybe we shouldn't trade houses. Maybe we shouldn't buy a second house. Whatever, they cut back because suddenly they're not as wealthy as they thought they were. And this is the wealth effect. And Greenspan identified this years ago, and he used it brilliantly to create the Greenspan put and to create, you know, economic prosperity during his reign, because every time we looked like we were turning down, he'd come in with soft money. And, you know, but the problem is at some point in time, that trick doesn't work. And so if this market goes down substantially, a lot of people are going to pull back. And, you know, and Trump and his voters, they're all like, that's great. We don't care. Let stocks go down. We don't own them. Okay, fine. But you know where they are going to care? When they lose their job.
Right.
Right. Okay. You know, so I'm a line worker at Ford and, you know, or wherever I work for a factory or whatever, but, you know, the economy is in the tank and demand is down. Well, you know, some people are going to get laid off. And so, and then that becomes reflexive, and then they get unemployment benefits, and then that makes the deficit higher. I mean, I guess the point I think I'm trying to get at is that the system is hopelessly broken because of all these fiat incentives and the credit bubble that we've created, and it needs to be reset. And Trump is trying to do that, and I know the Democratic response is going to be, hey, he ruined your 401k and you're going to be unemployed. And so Trump, and to me, it's extremely important if Trump wants to be successful in 2 years and then the Republicans in 4 years, they've got to get out there and start messaging about how we were dealt an incredibly bad hand by Biden, who ran up all this debt, and that debt is now collapsing. And that's his problem, not ours.
And not only Biden, but the former Trump and Obama and Bush.
For 50 years.
Right.
I mean, if you want to go back far enough, we pissed away $8 trillion fighting wars in the Middle East. For what? I mean, imagine if we'd spent that on developing nuclear power, high-speed trains, training our people. The policies of the federal government have been terrible, post 1971, frankly.
They've been terrible, but I would argue they haven't been necessarily illogical if you're thinking from a fiat world.
No.
I think that's important.
No, they haven't been terrible for Dick Cheney. He's worth hundreds of millions of dollars because he started a war in Halliburton, which he owned a big piece of, made a fortune on it, right? They haven't been terrible for Janet Yellen, who's, a blithering idiot, and yet she get paid $7 million in speaking fees from banks, which are really nothing but bribes. I mean, they haven't been terrible for the PE guys who from 2008 to 2015 were able to borrow money at 0% and buy yielding assets and become, as rich as Croesus. I mean, just silly rich, as a result of that incredible gift on the behalf of the federal government. They haven't been terrible for Ken Griffin, who should have technically been bankrupt in March of 2020, but because he has Ben Bernanke on his board of advisors, pays him rumoredly pays him $20 million a year, and Bernanke uses it to buy gold. Isn't that interesting? Yeah, right. I mean, this is from a source that's not bad. Bernanke made the call to the Fed, which said, hey, Fed, if you don't bail this guy out, the whole system's going to go tits up. So they gave him a swap line and they saved him. I mean, and by the way, they're talking about doing that again. I mean, James Lavish, who I know you're going to interview in this conference, had a great piece this last weekend where he showed that, the Brookings Institute, they're floating around a paper where they're talking about having a preemptive swap line bailout for banks that are in hedge funds and banks that are involved in the basis trade. Basis trade is a complicated thing. What it is, in short, is it's a way to induce hedge funds to buy treasuries and make a small spread in so doing. And it works fine when things are stable. But when things become chaotic, as they are now with something like Trump and tariffs, these trades blow up. And it's once again, it's the problem described in the book, which is we've set up a fiat system whereby the bankers, the financiers, the people in charge have more or less held a gun to the head of the American economy. And every time, and so they win throughout the up cycle because they get money cheap and they can get a yield on it. And then when inevitably they get too far out over their skis and they get too leveraged and it's all about to blow up, they take a gun, put it to the head of the US economy and say, give us our money or we're going to blow your brains out. And we give them the money, right? That's kind of, and that's the pattern. And the book lays this out. I mean, it happened all the way from Lockheed to, COVID. I mean, there are tons of examples. So that's what's going on. But as you point out, it is very important to zoom out. It really is because, I mean, do I know that gold's going to be higher or lower tomorrow? I have no idea. I mean, Bitcoin, I kind of think we're close to a bottom in Bitcoin, but I've said to people, wouldn't surprise me at all to see 70K Bitcoin again. I also think, though, that by the end of the year, Bitcoin will be at 140. I don't think the 4-year cycle is dead. And I think what we're really waiting for, and the Fed is chronically slow and chronically behind the curve, is that Jerome Powell, and we've seen him turn on a dime when he has to. Jerome Powell will have to be fully backed into a corner, and it'll have to be really bad. The market will be down quite bad. Maybe the bonds won't be rallying as much. They'll be starting to go the other way, which will be a clue that they're having trouble. And he'll come back in with, severe, emergency rate cuts, QE. I mean, he already stopped the tapering of QT. He took it from 25 billion a month to 5. So you can you're getting signals, and like this Brookings Institute paper that they floated, that's kind of a signal that they're a little worried. And so, this thing I described, this big print, this will come. And just as inflation was transitory until it wasn't, and then he started raising rates like crazy, he'll be as tough as Volcker until he isn't. And, employment and the economy are a much bigger concern than inflation. To hell with inflation, we're having a deflationary event. I got to print money. And this is, again, described in the book. The Fed is driving a car on an icy road with 2 guardrails, and one's deflation, one's inflation. They keep bouncing off the guardrails. They're out of control.
And the guardrails are getting tighter.
And the guardrails are getting tighter and tighter. And I mean, the perfect example. I mean, this is just the absurdity of we got 12 people sitting in Washington, D.C. setting the price of money, which is the most important price in the world, okay? Because it determines how capital is allocated. And the way that capital is allocated is what determines what we invest in, which is what determines how much productivity and efficiency we get, which is what determines all of our lifestyles. So if we invest correctly, we all live better in the future, the American dream. Your kids are better off than you are, okay? Well, that's all broken because of the system. And, evidence that it's broken, I mean, it's all over the place. I mean, how can interest rates be 20% in 1980, which nearly bankrupted my father, and then be 0% in 2008, which gave an enormous subsidy to cotillionaires? I mean, it's like, huh? There's just no, these are the guardrails, okay, right. We're going to be at the 20% guardrail where we got to, crush inflation. Paul Volcker, you're a hero, or, oh my God, we're going to fall into a inflationary depression, according to Bernanke, which is wrong. And we got to take interest rates to 0 and we got to print a ton of money, right? I mean, how about some kind of down the middle of the road, guys? And by the way, that's what the marketplace would provide, if we just eliminated the Fed, which we should do. And the book talks about that too, so.
Right. Yeah. Again, I think, like you said, to zoom out, I think a lot of people are getting more and more into politics, right? You have, in America, you have the left side of the aisle, the right side of the aisle, and it's becoming this increasing battle of which way is the money lever pointing, right? Mm-hmm. Well, when blue team's in, we can move the lever this way, right? When red team's in, we can move it that way, right? Mm-hmm. And I think a lot of people, to your point, look at any given current administration, policy, economics, or just the world anecdotally, and people say, none of this makes sense. But again, I'd like to emphasize that it makes perfect sense within a system that doesn't make sense, right? Like, it's not that these people in power are stupid. They're just doing the next logical thing to preserve the current accounting, frankly, fraud, which is
that's right.
Creating new energy units, which is dollar, for no energy spent.
Absolutely. They are very much behaving in their own self-interest.
Right.
To think that they're stupid is wrong. They are behaving in a way that benefits them.
Right.
And at the cost of all the rest of us.
Right. And if I could add that too, I think it's also easy for most people to say, oh, those people are, evil and this and that and the other. And maybe that very well could be true. But at the same time, when there's so much power in that seat of power, the reality is that 99.9% of people, if they were put in that same seat, they would do the
They
same
might
thing.
behave in the same way. Yeah, I mean, it takes extraordinarily strength to stand away from it and say, no, this is wrong. I mean, there's a guy in the book I call Thomas Honig, who's a Fed chairman or Fed governor who fought against Bernanke. The title of the lead of that little section is Thomas Honig, Braveheart. There are people who have pushed back on it, who are in the system and understand it's wrong, but they're rare. You're right. I mean, very rare. And
the incentive grows larger as the economy grows larger, right? So the more successful they are at keeping a sound money, the more powerful their seat of power gets.
Yeah.
And the greater the incentive, then start messing with it.
That's right. I mean, it's a pernicious system. It really is, and it needs to die, and it will die. And look, we're talking about all the bad news. I mean, the thing I want to emphasize, because people have accused me of being a doomer, and I'm not a doomer. I'm just a realist about how shit works. Is that there's a lot of good news. I mean, the decentralization, the fact that we're doing this podcast, the fact that people can see it all over the world, the fact that people can educate themselves, the fact that Tucker Carlson and Joe Rogan are outdrawing the major networks. I mean, these things are very, very good. And so these old sclerotic institutions, the government, the Fed, I mean, all these things that, big pharma, big medicine, big, military industrial conflict, these things are all going to get disintermediated as a result of technology. And by the way, the leading form of disintermediation is the monetary one, and that's what Bitcoin is. So there's a really optimistic, outcome here, that everyone should have their eye on that prize, that we can fix this. We can make the world a much, much better place. But if you're into fixing, what you got to do is you got to understand the core problem. And again, when I wrote the book, I was watching a political debate, and I saw these teams arguing over stuff. And I was like, you guys are just missing the point. You know what I mean? You're arguing, I used the analogy. I said, it's like the house is on fire and you're arguing about the color of the drapes. You got to go get yourself a fire extinguisher, hose and a bunch of water and put the fire out. And so the fire is the monetary fire of having fiat money, which is out of control. And if we go back to a sound money system, things will get much better. 2 days ago, I did a podcast with a gentleman who had grown up in Argentina. And he told the story of how, when he was in his teens, this is 90 and 91, his mother used to go to the supermarket, used to get paid. She'd race to the supermarket, right, to buy the food, because she knew in a week later it was going to cost more. And this was hyperinflation, of course. And that currency ultimately failed. And they reset to a sound currency. At the time, actually, the sound currency, they went to a dollar system, which was sound enough, much sounder than what they had. And he said, Larry, it was amazing how quickly things got better. I mean, most people in the world, they just want to go up, wake up, go to work, do honest work, take care of their family, not kill other people, live normal lives, and that's, and what's happened here is these very sophisticated financial criminals, in my opinion, have created a system that benefits them at the expense of the rest of us. And so, there are a lot more of us than them, and, we can vote them out, and we can change it. We can reform the system. And it's the sly, sneaky way that, that Hayek talked about, right? I mean, Bitcoin is the way they can't stop, right? And so how do we do that? Well, we spread the word. So that, again, that's why I wrote the book, right? And I'm going to measure the success of the book, not in how much Bitcoin people like it. I know Bitcoin people like it, right? It's obvious. But how many normies do we convert? That's what we got to do. We got to convert average citizens to understand why they're being screwed. And the first part of the book was written kind of in a punchy style with stories and anecdotes, because I don't think there are a lot of people who are hurting and they don't understand why. They're kind of saying to themselves, gosh, I know things aren't right. I know groceries cost a lot. I know my wages aren't keeping up with inflation, but they can't put their finger on it. And, blue team would like to convince them it's red, and red team would like to, no, that's not it. It's the money. We got to get rid of the Fed.
Yeah. To your point about voting them out, right? To clarify, that's not, you don't vote out of that system by, voting for a different entity within that system. You vote out by...
Those are both in the system. Right.
You go to
you vote for an alternative. Yeah, right. You vote for an alternative.
Right.
And what's going to happen, and this is why even if we weren't doing what we're doing, it would happen just because human beings gravitate slowly in the right direction. I mean, there have been a lot of terrible times in human history, but we have continually improved ourselves. And, eventually what will happen is, this better system, Bitcoin, will just kind of replace everything else. The others will just kind of attrit away.
Yeah.
But, the reason we're doing this, as you and I both know, is, I'd rather see it happen sooner than later, because I got kids and someday grandkids, and, the longer we live in the broken system, the more painful it is.
There's a human cost to every year.
There's a human cost every year where we don't improve it. Right.
Right.
That's a good point.
Right. Definitely. Yeah. But often the way I put it, to people trying to explain, Luke, why do you work so much on Bitcoin? Or, why are you like obsessed with this? For me, it's because like I have total confidence that Bitcoin's going to win. In my eye, Bitcoin's inevitable. Even if 99% of the world never adopts Bitcoin, well, eventually that 1% are going to be the only percent with money left, right? So in my eyes, Bitcoin's inevitable. But what's not inevitable is, are, let's say, 10 million people going to die over the next 20 years or 30 million people going to die?
Well, that's right.
There's at least by my math, 5 to 8 million people dying every single year due to economic and fiat inefficiencies.
Absolutely.
Right?
No, that's absolutely. And who knows what wars will get started and so on and so forth. I mean, there are all kinds of subsidiary benefits. I mean, as you and I both know, I mean, Bitcoin's a lot more than just number go up.
Right.
It's freedom, it's independence, it's taking the power away from governments to wage war. Because every war in history has been paid for via inflation. I mean, just think about it logically. If the government came to us all and said, we're going to conduct a war and we need 70% of your income to pay for it, well, everyone would say, what are you, out of your mind? I'm not giving you 70% of my income. We're not conducting that war unless it were existential, like World War II.
Right.
But in which case people suffered a great deal, but they were willing to because they realized it was existential. And so, without that ability to inflate away people's savings, governments couldn't conduct a war because they couldn't pay for it.
Right. I think a good example, most people watching are probably Americans, right? So I think a great example of that is the Civil War, right? A lot of people don't remember or don't know, but Abraham Lincoln was very controversial and hated at the time because he had the greenbacks. There was a lot of inflation in the North, much more in the South, right? But, that's why I think it's important people understand Bitcoin because, not only are you having your time stolen from you when you're using American political currency units, but you are strengthening that system, right? In the same way, if you held a bucket full of Confederate dollars during the Civil War, you could argue that there's some intangible amount of, slavery or people dying on a battlefield because you're giving that system.
You gave that system your energy. That's correct. Yeah, no, that's absolutely right.
Yeah. So I would love to transition into, like you said, the more optimistic world, right? I would love to hear your thoughts on stablecoins, and because I think stablecoins are a Trojan horse eventually for Bitcoin. And what Besant said at the crypto summit with Trump, Saylor, Lutnick, and everyone else, I'd love to hear your thoughts on Lutnick, Sachs, and especially Besant on what you think the trajectory for stablecoins are over the next 5, 10, 20 years.
Sure. Well, look, I mean, stablecoins are kind of ultimately shitcoins because they're tied to the dollar.
Correct.
I mean, but a stablecoin does enable people to use and move large dollar amounts over the crypto rails, right? And that's why Tether and Circle are as large as they are. And so, and by the way, the Tether and Circle then, when they issue a stablecoin, they bring in cash. They issue a stablecoin. They put the cash somewhere, and it's typically into Treasury bills. A lot of it is into Treasury bills, and so that Treasury bill purchase actually helps fund the government. So, so I'm a little bit mixed on stablecoins, but having said all of that, that demand, the usage of crypto and the usage of stablecoins, I think ultimately leads to higher Bitcoin prices. It has to, because it increases awareness of crypto and Bitcoin, and so it's a means. I mean, there's an argument, several have made it, that we need to push the Bitcoin price up so that the stablecoin volume will go up, and the stablecoin volume will then lead to buying in the Treasury bills, and so that's kind of a way of helping defease the debt. So let's go through, the guys who are at the top of this whole thing. First of all, I think Besant gets all of this reasonably well. He comes from a hedge fund background. His largest holding before he was Treasury Secretary was gold. He's talked about a monetary reset. He clearly understands Triffin's dilemma, as does J.D. Vance.
Which can you explain real quick?
Yeah, Triffin's dilemma just says that basically, if you hold the world's reserve currency, by definition, you need to print money and run deficits, or else the rest of the world can't operate they don't have enough currency. And so when you create a debt-based system, you need to increase the debt, or else you're not able to pay the interest on the existing debt. And this is the whole Keynesian model that says you've got to grow your debt in order to grow your economy. And it's not necessarily true. I mean, you can actually have a deflationary economy that grows in real terms. We had it during the 19th century. Jeff Booth's book is all about that. The deflation is a good thing. And my book, has some parts that talk about deflation and why we need deflation, not inflation. But anyway, when you have, with Triffin's dilemma present, and that's why that U.S. industrial base has gotten hollowed out, the only solution to that is to go back to a neutral reserve currency. The minute the U.S. assumed the role of the world's reserve currency, and then particularly when it broke the link of that currency to gold, which was somewhat of a break on issuance.
In 1971.
In 1971, everything went crazy. And the book has a great chart on that, just shows how in 71, how inflation just took off like crazy.
Yeah. Now, really quickly to add to that, I think a lot of people, especially folks younger like myself, would say, well, but Larry, it's been working since 1971. 1971 was forever ago. Why wouldn't it keep working another 50
well,
years, right?
it has and it hasn't. I mean, we've had consistent 7 or 8% inflation since then. And yes, all the numbers have gotten bigger, but it's not working when you've got a situation where the top 1% own 92% of the wealth.
Right. There's only so far you can take an accounting trick.
Yeah,
Right,
that's
right.
And it's not working when your debt to GDP is 130%, or almost that. We're at 120 something now, low 120s. Then it's no longer working. And there's history that shows that, and it's a great Brian Hirschman chart in the book that shows that when you hit these levels of debt to GDP, you're going to have a currency event. I mean, the problem fundamentally is that in the initial days, when you take on debt to invest in something, if it's properly invested, it'll actually grow the economy, and that's a good thing. Eventually, though, the debt starts being used for bad things, just leverage buyouts and other non-productive reasons. And if the debt grows faster than the GDP can't service the debt. And so the way out of that is either the debt collapses or you got to grow the GDP through inflation. So
98%, just to clarify, 98% of the countries that have hit our debt to GDP levels had hyperinflation, default, or war within.
That's right. The only one that is not is Japan, and it's a really special case.
Yeah.
Because of their savings rate and how conforming they are as a people.
Right.
But so to close the loop on that, that day of reckoning is, in my opinion, kind of here. I mean, we're now at the stage where we can't push it much further.
Yeah.
I mean, they're trying, but I think that and what happens in these events is, eventually the currency really starts to debase. I mean, and by the way, we've kind of gotten there. I mean, it's pretty shocking to me and really horrible when you think about it, that the COVID example grew M2 40% in less than 2 years. So that's why everyone who's looking out there and saying, why are my groceries so expensive? That's why. Okay, that's it. That's pure and simple reason. And what that means is that somebody who'd worked their entire life and saved a certain amount of money, they just had 40% of it stolen. Their savings just lost 40% of their value as a result of what the government did. And you might say, well, who got that money? Well, the people who got PPP loans, the people who got cheap loans under ZIRP, the STIMI checks were part of that money. There were all those people benefited, but everybody else paid for it.
And if I could add to that, a lot of that wealth is destroyed in that transfer.
Correct.
So it's not 40% being transferred from everyone else to the 1%. It's 40% is transferred, and in route of that transition, a lot of the economy slows down. So most, and
some of it just goes, some of it just goes away. Yeah, that's correct.
Yeah, you have to squeeze people more and more for a smaller and smaller amount of
correct.
juice.
So it's a very broken system, sadly, Luke. But it's going to get better.
Yeah. So back to that. So you think Besant understands the dilemma?
Oh yeah, I'm sorry. Let's to the people. So I think Besant gets it.
What about Lutnick? What do you think about Lutnick? He's got $1 billion of Michael Saylor's stock.
Yeah. So look, I mean, what I like about Lutnick is I really think he understands Bitcoin. I think he knows what it is. I think he's a Bitcoin bull. He's bought a lot of Saylor stock. He owns a lot of Bitcoin personally. I respect him a great deal for his view on sound money and how important it is. Okay. What I'm a little less excited about with respect to Lutnick is he's a bond salesman historically, and I'm not really. I think he's a little bit uninformed and unrealistic on how quickly and easily we can make this transition. I listened to him the other morning. I listened to him the other morning on CNBC, and he was like, "This is going to be great. We're going to do these tariffs. We're going to bring all these factories back here. There's going to be trillions of dollars of capex. Everything's going to be hunky-dory." And I'm like, dude, I understand. And maybe he doesn't believe that. He just says it because that's what he needs to say to support the Trump administration. But if he really believes that, he's not very smart because the transition is not going to be that simple. It's just not.
You can't unwind 50 to 80
We've
years
got exactly. We've got 50 plus years of going in the wrong direction we can't solve this in 6 months or a year or even, I mean, this
not even 5.
probably not even 5. This is going to be a longer term project. It's going to be messy. There's going to be disruption. And I'm not suggesting we shouldn't have started out down this road. I think the road we're going down is a decent road to go down.
Right.
I think it's long overdue that we try to correct these imbalances. I will say that, and actually the analyst Luke Roman has pointed this out. I think he's right. To try to correct these imbalances without first focusing on a monetary reset is going to be extremely difficult. And what do I mean by a monetary reset? Problem we've got is pretty simple. We've got too much debt as against the amount of GDP that we've got. We've either got to write off that debt, which is unlikely, or we've got to write it off in real terms, which is to say we've got to have a big burst of inflation to grow the GDP. And what I think we should do, and I talk about this in the book, is I think we should rip the Band-Aid off and basically reset to sound money. Say and I think we should leapfrog China and India and other countries that have bet on gold and say the United States is going to go on a Bitcoin standard. We're going to sell all our gold. We're going to use the proceeds of that to buy Bitcoin. We're going to issue bonds with a Bitcoin with a yield that's part interest rate, part Bitcoin, the Andrew Hone suggestion, very much like the Judy Shelton gold suggestion. And we're going to slowly but surely defease this debt. And doing what I'm just describing would crush the dollar. The dollar would be down 50%.
Right.
Okay. And so our ability, foreign goods would become much more expensive. That'd be fine. Domestic manufacturing, our goods would become much more competitive around the world. That would be good. And and more importantly, on a go-forward basis, if we were on a Bitcoin standard, they could not print Bitcoin to run deficits. So the government would almost instantly have to balance its budget, right? And so, to me, all those are a massive win. Now, the problem is, I don't think that, and I think maybe at its core, Besant kind of understands that. But if you think about how politics work, I mean, nobody's ready to do that today.
It's painful.
It's really painful.
Right.
And I don't even think the country understands the issue, and they wouldn't understand that's the solution. And I mean, it's just, it's very hard to get from where we are to that. And sadly, as you know, you need a crisis to often drive that kind of change, right?
And unfortunately, I think, again, going back to the fact that, there's a lot of these, financial criminals in charge of the system, right? Back to your point with popularity, it's like, it's easy for us to criticize those criminals, and I think that's worthy, but at the same time, people would rather have the pain of having a criminal in charge than to put someone ethical in, and then they themselves have to deal with the pain of coming back to the sound system. So I agree. I think it's going to be, it's going to be a challenge.
It's going to be a big challenge. And so we will, but I mean, what do we know? We know that a sound money system is better than the alternative. You and I both know that. And I think the world is going to learn that. We're in the process of learning that. Right. And if you know that, you're actually very much ahead of the curve. You're an early adopter. And I think you're going to, if you invest accordingly, you're going to be financially rewarded. So I think, your kids, my kids will be better off for our knowledge in this area and other people who are, following us on this. And we know that we will ultimately, because that's the truth, we know that we will ultimately get there. What we don't know is the zigzaggy path that it'll take to get there, and the crises and the problems that will, be present between here and there.
Right.
What we also don't know is how many people also understand it, and if anybody, for those who want to be socially conscious and try and make a difference, what I think we can do is we can spread the word. So, therefore the podcast, therefore the books, therefore the advocacy, all of this, in my view, if you do this, you're doing something that I think will make the world a better place. And that's partly why I do it.
And quite frankly, I think, it's easy for us to be sitting here talking on camera, right? But, I think, including for everyone watching, I think quite literally saving lives, right? Like
I believe that.
If you're in the Confederate States of, when there's the war, if you're in a tyranny when there's a war, right? If you're under North Korea's regime, right? One of those effective things you can do.
Yeah, if you support the regime and the regime is doing evil shit, if you were, there was a,
rejecting their token is often the most practical thing you can do.
Yeah, I think that's right. So everyone gets a couple of votes. They get a vote with what they do with their savings, so they can put them in Bitcoin. That's a vote against the system. They get a vote at the ballot box, so that, if you understand this, at some point, there will be more Thomas Masseys, there will be more Cynthia Loomises, there will be more Robert Kennedy Jr.'s, there will be more people, Vance, I think, understands sound money. There will be more people who come to it and realize that sound money is a really important issue. It'll be on ballots that will have sound money candidates and unsound money candidates. And guess what? If the sound money candidates win, we're going to move towards a better world. And so, they're in this, the tome I wrote about this shit. I'm trying to convince people to do this because that's how we get there. We're going to need those votes.
Yeah.
Because we live in a democracy. I mean, it's not perfect, but it's it's going to count.
Yeah. So I have a theory I want to run by you that I'm not sure if you're going to like it or not, but I'm really curious to hear what you're going to say. Right?
Sure.
Because
That's fine.
Because as we know, Michael Saylor is, I think we both agree, one of the most consequential Bitcoiners in the world today.
Absolutely.
And one of the things I think most people in Bitcoin aren't yet prepared yet, because I think you, me, and everyone watching shares the same disdain and distrust of the fiat system, right?
Yeah.
But when it comes to Michael Saylor, he was a fiat entity in charge of his corporate stuff, right?
Right.
And his company was dying; it was trending away, right? And the thing that extended the lifespan of his fiat system, which is his corporation, was Bitcoin. He plugged Bitcoin to the balance sheet, right? So my question to you is, what I think is likely is that America, maybe Lutnick Besant, maybe Trump, we'll see, but I think they're going to realize, well, we have this debt problem. If we just add Bitcoin to the balance sheet, we can monetize Bitcoin forever, right? We can't monetize real estate that much more because we're forcing out young families, right? So why don't we plug Bitcoin to the balance sheet, pump it to the moon, right? Issue all these stable coins, right? We can crush these other currencies in the world. And effectively, the implication of what I'm saying there, of course, is that I think, unfortunately, that would probably extend that bond, fiat, whatever, by a long period of time. So I'm curious what you think about that
but
theory.
Okay, so I love the theory, and I think that's what we should do, and I pray that's where we go, okay? But I'm not sure it extends bonds and fiat, okay? So think about it. If our federal government, and I get it. I have people who say to me, well, gee, if you want to put Bitcoin on the government balance sheet, you're being a statist because you're supporting the government, right? We should all want the government to fail effectively. And my view is, well, not really, because I like our government more than China's government.
I think we want the government as it is today to fail.
Yes, I want the fiat government to fail, but I don't want the United States of America to fail versus Russia or China or living under any other regime. So, but let's go back to your point. I don't think it really extends the fiat system because if we were, because I don't think you're thinking through the second order effect of what it would do to the dollar. Okay?
Sure. Yeah. So I'd love to hear. Yeah.
Yeah. So if we decided, let's say, for example, let's say we really have the 261.5 million ounces of gold, okay, which I don't think we do, but let's say we did. For the sake of argument, let's say we do. And let's say we went out to the marketplace, we sold them all. And then let's say we took that proceeds and we used it to buy Bitcoin, okay? That would be an enormous signal that we don't trust our own currency and that we don't believe gold is the future reserve currency, right? And then let's say we said, okay, we're going to also start selling national parks, and we're also going to, start selling bonds that have a Bitcoin backing. Do you realize what the price of Bitcoin would do?
It would go to tens of millions of dollars.
Exactly.
Yeah.
And by the way, that tens of millions of dollars would enable us to pay off the fiat debt. But a couple of things to remember. It would be massively inflationary in fiat terms, right? If you cut the value of the dollar in half, you've effectively just doubled the price of everything. You follow what I'm saying?
Yeah, of course.
So it's, in my view, what Saylor's doing, Saylor is running a speculative attack on the US dollar. Okay.
Right.
Now, he won't say that because he's politically smart. He can't, and he's politically smart. But that's what he's doing. And Saylor knows, and I believe he knows this to his core because he's a good engineer and he's smart. Saylor knows that fiat is doomed. Yeah. And Saylor knows that your kids and my kids will price things in sats. I'm so sure of that. It just can't stop me on it. So the question, so what we're describing, yes, I think that's what we should do, but be careful what you wish for because it will be, in fiat terms, it will be inflationary.
Right. Well, to be clear, I'm not saying I wish for X or Y. I'm just trying to figure out, I don't care which path we go. I want to figure out which path are we likely to go.
Yeah.
Now, okay, so when I had dinner last year with Saylor and Paolo of Tether, CEO of Tether, right? And this is something that was most of the night, frankly, was this kind of conversation. And so my question in response to what you just said is, in my view, what is extending the lifespan of the dollar is exporting more dollars to the rest of the world, right?
Correct.
And when it's stable coins and, maybe, like Saylor talks about all the time, billions of people are going to have, the Bitcoin and the stable coin on the same app on a mobile device, right? Like it is not banking, quote unquote, another couple billion people into the dollar system via stablecoin apps. Is that continuing exporting of the dollar? Is that not going to extend fiat to some degree?
Well, Yes. So, I mean, I think what we're getting caught up here a little bit is in the difference between store of value and medium of exchange.
Right.
Okay?
Sure. Yeah.
And so all the rails right now are built on the dollar. And so, I mean, not all, but a big percentage of the rails are built on the dollar. And so the dollar could be around as the leading payment and medium of exchange currency for a long, long, long time. Okay. But in terms of store of value, as that store of value continues to attrit away and dollar prices get more and more ridiculous, and maybe prices are changing hourly, people might be saying to themselves, I'm never changing the dollar and buying. Why don't you take sats? And so sats will just replace the dollar. I mean, as Saylor said, and I agree with him, the first country to win is the country that realizes that they can print their fiat currency and use it to buy Satoshis.
Which is what he's doing with his own stock.
That's what he's doing with his own stock.
Right.
And he's advocating. I mean, I give him a lot of credit. He's got balls. I mean, he's in there. I mean, he was sitting at the same table with all those other crypto guys at that summit, and he's in there advocating. You guys ought to be, selling debt. You ought to be selling gold. You ought to be selling everything you got and using it to buy sats. And knowing, and I think they know it too, that will destroy the dollar. In terms of, I mean, it's Gresham's law in terms of its purchasing power, right? Now, as you point out, yes, we export them, and there may still be, I mean, what currency you transact in, with the technology the way it is today, that's not really going to matter that much anymore. I mean, you know how quickly you can change. I mean, I can go from dollars to Canadian dollars to Thai baht. I mean, there are now online so many ways to quickly, there's a cross rate for everything, right?
Right.
I mean, for all these shit coins, there's a cross rate always, constantly. And so, what you end up transacting in, fine, that's what the other guy wants. Okay, fine, I'll do the conversion, I'll transact in that. But at the end of the day, what really matters is what's the stable reserve asset? What's the neutral reserve asset that represents a store of value, right? And that's what Bitcoin is set to become.
Right.
Right.
So let's talk about Bitcoin price in that world.
Yeah.
Right? So, okay, my question to you is that my understanding, and maybe you'll have a different take on this, but my understanding is that gold is historically about 6x undervalued compared to equities. And I think, Bitcoin's at least 5 to 10 times better than gold.
Yeah,
right?
I agree with that.
With gold being 3,000 an ounce, 21 trillion market cap, that's about $1 million of Bitcoin if Bitcoin reached gold parity today, right?
Correct.
10 years ago, when at these very same conferences, when the Bitcoiners are saying, oh, when Bitcoin reaches gold parity, it's going to be $200,000, $300,000, $400,000 a coin. Now it's $1 million.
It's going to be higher, yeah.
But I think, let's say gold hits 9,000 an ounce,
Mm-hmm.
let's say 5, 10 years from now, whatever. At that point, Bitcoin to reach parity will be 2, 3, maybe even 4 million.
Correct.
And at that point, like to me, when I look at this, because we talk about $1 million Bitcoin prices all the time, and I think, oh, maybe we're crazy. But then when I think of it in that way,
we're not.
like Bitcoin could merely be double gold's market cap.
We're not. I mean,
10, 20
we're not.
million
And
yeah.
the whole exercise gets a little bit wacky because, how badly can fiat get debased? I mean, as I often joke that we're going to have $10 million Bitcoin, but in dollar terms, that might also mean hamburgers $1,000 an ounce. Do you know what I mean? I mean,
Yeah.
the fiat is really debasing quickly. And so what we're talking about are pricing all of these things and coming back to a fiat thing because that's the major currency right now. But eventually, the prices we will quote things in sats. Do you know what I mean?
Yeah.
And the fiat piece won't even be there to worry about because fiat will be gone. So, but yes, I mean, the exercise you're going through is correct. I mean, I like Jesse Meyer's chart again in the book where, at 100,000, a coin roughly, we're at 20 or 2 trillion, a little less than that because 19.9 or so million coins out right now.
Give or take a couple hundred billion.
Yeah, right. It's close. We're at 2 trillion. Well, he's got a chart that shows there's 900 trillion of financial assets. So Bitcoin today is 0.2% of all the financial assets, if that's include real estate, okay, of assets. So 0.2%. The best, a unique, undilutable, technologically secure invention, the best form of money that mankind's ever had because it doesn't dilute, okay, is 0.2% of all the assets in the world. That makes no sense. I mean, it could go from 100,000 to 1 million, which would be a 10x from here, which it will, and it would be 2% of all the assets in the world. Well,
and in that time, those rest of the assets will grow by 20%.
correct,
Yeah.
and that'll make the numbers higher. But my point is that gold right now at 20 trillion is 2% of all the assets, and that's another asset. That's another neutral reserve asset that can't be printed. that nobody cares about because everyone's in stocks and bonds and they're in the fiat world, right? But the fiat world is slowly but surely committing suicide. And so, and more people are going to wake up to the fact that they need to be in these non-fiat alternatives. And when they do, there have been times in the past, in 1980 and other times when gold was 10, 15, 20% of financial assets. And that could happen, that could easily happen again. And so that's another 10 bagger from here. So, I mean, these mental models of how high the price can get, they're hard. It's
Right.
hard because you're talking about two things that are moving. The value of fiat's depreciating and the relative, value of these better assets is going up relative to fiat. So,
And number three, the world's hopefully producing more productivity.
well, that's right.
Right.
Yes, yeah, and yeah, exactly. And so, yeah, and the economy is getting more efficient. So look, all I know is I feel extremely confident and relaxed knowing that my assets are in things that can't be printed. That just gives me great comfort that, I can retire and financially I'll be secure, for the rest of my life so that I don't have to work until the day I die, so to speak. So, and maybe even leave a legacy for my kids. So, to me, it's kind of inevitable. And, one of the things we should address, I've tried to make this point on other podcasts. I think it's important though. A lot of people look at it. I mean, so things I encounter when trying to orange pill my normie friends, right? Well, I used to encounter, well, it's you can't touch it. Okay, so I got them through the ledger argument, and then I would encounter, well, the government's going to ban it. They hate it. It's a libertarian dream. It'll never happen. Well, then the ETF came in, and now we have strategic Bitcoin reserves. So that got swept off the table. The one I'm now encountering most often is, shit, yeah, but it's 100,000, and you got it for 10 and 400 and 20, and and I bought it all along the way, and I can't pay that much for something you paid 100. I can't pay 100,000. You got it cheaper.
Right. I can't justify doing it.
Justify doing it, and by the way, everyone knows it'll revert to the mean. It's overvalued now. It'll revert to some kind of a mean. And I said, no, you're looking at it through the wrong mental lens and the wrong model. Okay, the way you need to look at this is you need to consider the fiat system as the Titanic. Okay. And Bitcoin is a seat in the lifeboat. And, Max Kaiser bought seats at $1 a coin. Trace Meyer got them at 50 cents. Okay. I paid 400 and then 10,000 and 20,000. Okay. The seat to you now is 86,000. You're in the Titanic. You want the seat or not? Pick one.
What people don't understand is it's not optional.
Yeah. Well, I get it. Well,
yeah.
Or no, but if you accept the model, now some people say, well, you're being hyperbolic to call the financial system the Titanic. And I'm saying, I'm really not. If you look at the mathematics of it, it has to end that way.
Yeah.
Because Keynesianism is fundamentally a broken lie.
Yeah.
And so it has to end that way. So, what we do not know, what we all struggle with, is the path, and that's very hard. And that's why, having a long time preference is important.
Right. And I think that's why it's important. Talk about the big price numbers, right? Not that we think it's going to happen anytime soon, but
no.
But it's about, in my view, it's about hopefully helping people understand. I think the most effective way to get people to understand Bitcoin is for them to realize, it may not be too late, so to speak.
Oh, it's not at all too late. It's not at all too late. I mean, there's really never a bad time to buy it, unless you need the money in 6 months. I mean, because of its volatility, it is the sort of asset that you have to have a long-term perspective on. I mean. Right. We all know that each cycle is about 4 years, and we all know that the drawdowns are not, trivial. I think they're getting smaller. I don't think the next drawdown, I don't think we'll have any more 70% drawdowns. But, if we scored up in this round to 250, 300, 400, maybe higher, let's say we go to 400, could we draw back to 200 all day long? Even if the top of the cycle is 140, could we draw it back to 70? I don't really see it, but I suppose it's possible.
Yeah.
I think that the limited supply and the increasing adoption, I think, as Saylor says, I think we really are kind of in the gold rush age here. I mean, or the Malcolm Gladwell model, again, it's in the book. I think we're kind of at the inflection point. The curve is starting to get pretty steep. And I fully expect this cycle to show us 200 plus, well before the end of 2026.
It especially depends on what the print is. Right?
Well, that's right.
Yeah,
that's exactly right.
And as a reminder and encouragement for everyone, I think Larry you and I would both agree, trading the cycle is not a good idea.
No,
because let's say the cycle tops 400 grand.
Mm-hmm.
People say, "Oh, this is crazy high. I'm going to sell it and buy it back at 200." Well, if you're right about the big print, by the time we fall 50% in real terms, maybe we don't fall as much in nominal terms. And if
Well-
you're trading back to dollars, you inherently have to be right in nominal terms. as
Yeah,
well,
and
right?
Saylor and some others have said, you know, and on this cycle, it's a very good possibility that we'll get to 200, 250, 300. And a lot of people think, oh, this is it, and I'm going to sell it, and it'll go to 600.
That's also possible.
Right.
That we
And then
don't
it-
have a downturn.
And-
Yeah.
yeah, and so, you know, the way I view it, this is your global savings pool. This is your long-term legacy money for you and your family. And, you know, look, if it squirts up to 400, you know, would I maybe peel off a couple percent, you know, to do something with it? Yeah, maybe I will.
Yeah.
But you know, in general, you know, why would I ever sell my savings unless I really needed the money? You know, that's the future. That's the seed corn for, you know, the next generation, et cetera. So I encourage everybody to kind of think that way. You know,
Right. And you may not ever need to sell it.
I may not. Well, there's the whole borrowing thing, and
Right.
that'll get more efficient with the sub 121 and all that kind of stuff. But you know, right now, I mean, I friends have said, "Hey, you should borrow." The borrowing rates are pretty high. I'm not.
Right. Well,
yeah.
you know, I mean, as you know, that's why I always talk about the importance of self-custody. Like,
Yeah.
like rates are high, but the lower risk your self-custody setup is, the lower risk your tax and legal risk. You know,
Well,
and
that's
if you
right.
If you prove that, you're going to get far better rates, far better amortizations, and far better.
No, that's
everything,
a
right?
fact. Well, and it
Yeah.
also gives you the optionality that if you know, if ever the wrong politics emerge in your country, you can kind of say goodbye.
Exactly.
You know?
Yeah. And I think a lot of people aren't appreciating that. I have calls every week with people I'm meeting, and it's like they have debt on their Bitcoin, but it's like they have it in some platform or some counterparty risk. And it's like,
Yeah.
okay, you're paying a 15% or whatever interest rate, 2% origination fee every time you roll the loan, which is every year, by the way.
Oh, is that right?
Right.
Yeah.
Yeah. Plus the risk, not only
That-
for what you're
yeah.
borrowing, but then the over collateral you're putting up to make the loan. I mean,
Correct. Well,
it's-
and
yeah.
and all of these organizations. I mean, you know, 6102 was a long time ago, and this was when FDR grabbed the gold. And I'm not saying the government's going to do that again. Certainly in this administration, that looks highly unlikely.
But it's a non-zero risk.
It's a non-zero risk. I mean, we could have a very aggressive, you know, new administration where, you know, AOC and Bernie have determined that we are all getting rich off the collapse of the fiat system, and we need to be taxed at 90%. In fact, we need to grab all that shit.
Yeah.
And I can assure you that if the federal government calls up Fidelity and BlackRock and all the big ETF companies and says, you know, pay all your people out in cash and send that Bitcoin to us, they're going to do it. They're going to comply with the law. And so that's why we all say, you know, not your keys, not your coins. So
We don't think they'll do it, but if they were to get desperate,
yeah,
there's a
yeah, I
national
don't.
security issue.
Well, that's the
What are they
thing.
gonna
That's you know, politics is the art of taking advantage of crises. You know,
right.
and usually to our detriment.
Well, and the other thing too, and this gets back to an earlier point you made about how Jerome Powell pivots quickly, is that pivoting quickly and having a crisis quickly, you can do so much more.
Well, that's right.
Right? Like it is a less destructive PR stunt to print 10 trillion in the next big print
Yes.
at once instead of a trillion every quarter. for 10
Absolutely.
10 quarters, right?
Absolutely. I mean, the government literally relies on that. I mean, the what was it? It was Rahm Emanuel. I mean, never let any good crisis go to waste.
Right.
I mean, they figure out what they want to do. They create a crisis around it. They let it happen, and then while we're all kind of going, "Hey, what the hell's going on?" They do a bunch of shit that's really bad.
Right.
Do you know what I mean? And I mean, you know, COVID maybe fits into that model. Maybe 9/11 fits into that model. I mean, there are a lot of things that fit into that model.
A lot of things do.
Yeah.
Yeah. So since we kind of meandered into this topic, this is something I've been thinking about a lot because
Yeah.
this is a lot of what we're working on and we're seeing at Bitcoin Advisor is more and more of these products, insurance products, loan products, whatever,
Yeah.
come to market, right? Which, you know, in hindsight makes a lot of sense, obviously, because the biggest pool of dollars in existence is the future, not the present, right?
Sure.
And so, you know, I'm wondering what you think. You know, what I think is going to happen is that the most effective way Bitcoin is going to monetize the world is by monetizing that big pool of dollars, which is in the future yet to be printed, right?
Right.
And the basic word for that is debt, right?
Right.
And so I think a lot of people are going to do here in the near future. Some of my clients are already doing it, but I think more people in Bitcoin are going to do it. Or long-term fixed rate Bitcoin kind of loan products to end up getting more Bitcoin, right? Kind of like how Michael Saylor can have a 0% note on a long-term Bitcoin acquisition plan. You know, I think my point here, my question to you is that I think that's going to be more the transition. It's less people selling their houses, their stocks, or whatever to buy Bitcoin. It's going to be more so wealthy investors borrowing new capital to buy Bitcoin instead of selling it. And a combination of both, obviously. But what do you think about that long term?
Well, I think there's certainly going to be more of that. I mean, I think that it goes down to really the cost of the borrowing, right?
Right.
I mean, I'm very highly confident that Bitcoin's going to compound at, north of 15% a year, arguably 20, 30, 40% a year for a bunch of years.
I think 15 is pretty bearish.
Yeah, right. I mean, and so I mean, but I tend to be averse to debt
Right.
in general.
Yeah.
And so the debt has got to be, can the debt be called? I mean, how much, what's the rate of interest on the debt?
That's why it's so important. I especially would emphasize this. Yes, because it's in my self-interest, but also because I think as we hit 200, 300, 400 grand, a lot of people are going to take that to buy Bitcoin, and it's going to seem like it's inevitable, but like if you cannot put a price on the margin call risk, collateralization.
That's exactly right.
So high risk.
That's exactly
Don't go down that road.
That's exactly right. I mean, yes, I mean, levering up your Bitcoin. This is an asset with enormous appreciation potential, but with a lot of volatility and with significant drawdown risk. And I remember it like it was yesterday. I think you were in the space at the time. Remember Plan B? The guy who remember. And Plan B was, I mean, he put a flag in the sand. He said, this thing's going to 150 in the next 6 months, right?
Right.
And I saw a bunch of young guys. Oh my God, it's going to 150. Well, I got to lever the shit out of this thing, right?
Yeah.
And they had 1 or 2 coins, and they bought 3 or 4 more because they wanted to capture that gain.
Yeah.
And then there was a blip, and it went down, and they got wiped out. And the margin call, and the 2 coins they had got taken away.
Right.
And I mean, you don't need to lever an asset with this kind of asymmetry,
right,
and this kind of volatility. It's stupid in my view. Now, and people say, well, hang on a second, but Saylor's doing it. Yes, he is, but if you actually look at the amount of leverage on Saylor's balance sheet compared to the size of
it's about 10 to 15%.
it's very modest.
Right.
It's extremely modest, and because of the volatility in the vol game he's played, his cost is very, very low on a carry. I mean, he's had 0% or 80 basis point debt. So, and and in a lot of it's in converts. So, he's done it in a very prudent way.
Yeah.
So.
Yeah, that's why, again, I think it's important for everyone, especially as these products flood the market.
Yes.
And this becomes the new normal for people to do. I always say we have less in common with the near future in the past.
Yes.
And I think even most people in Bitcoin today, dare I say, are going to lose a significant amount of the coins because they over leverage, they get overtaxed, they lose the keys, they don't do whatever, right?
Yeah.
And so, the encouragement I have, I think you agree with that, is that if people are looking to copy Saylor or looking to do leverage, they should focus and obsess over lower your risk, don't have margin calls, long-term, low rate,
Correct.
fixed rate, all that stuff. And
Right.
if you aren't going to do that, or if you're going to, borrow 40 or 50% instead of like 5%, right? It's just, don't blow yourself up.
Yeah, no, I think that's right.
Just because Luke and Larry are bullish on price, like I think there's a lot of volatility.
It's a legitimate, it's a very legitimate risk. I mean, I've often said, and I think there was a while back when I thought some Bitcoiners were being irresponsible when they were trying to drag newbies into the space without explaining the downside risk.
Right.
I mean, because I mean, and I saw this happen. Remember when we were, pre-Sam Bankman-Fried, for example, we were at 50 or 60. It's a pretty good number. We were up there quite a ways. And SBF comes along and all the crypto stuff blows up and we go down to 15. Well, I know people who chased it, bought it at 60, it went to 15. That was a hard ride down, okay? But if you didn't sell, you're now fine, right? But the point is, some of them, it went to 15. They thought they'd made a mistake. They said, oh, fuck this, I've been scammed, and they sold it. And so, this goes back to the understanding what you own, understanding why you own it, and having a long time frame. But as Bitcoiners trying to convince new people to do it, when everyone says, how much should I do? My response is, how much can you handle a 60% drawdown on knowing you won't sell it?
Right.
So if you put 4% or if you put 10% of your assets in Bitcoin, and if that 10% went down to 4, so you lost theoretically 6% of your assets on that drawdown, would you be tempted to sell? Would that ruin your life? Would you feel like you'd made a mistake? Would that be a bad decision? If the answer to any of those is yes, then you should buy less. If the answer is no, I'd be fine with that. In fact, I'm pretty sure I'd buy more when it went down like that. Well, then you're a Bitcoiner. Then you get it.
Well, let's focus on the other 90% first.
Yeah, right. Yeah, right.
Yeah,
well,
I know.
But you know what I'm saying.
I know what you're saying.
Yeah, you know what I'm saying.
Yeah, and the other thing too, again, just to hammer on the point one more time, in that, I have these calls with people that have recently gone through a big loss. And to emphasize this point, a 50% drawdown in price is nowhere near as painful as a 50% loss of funds. It's the same percentage, but a 50% loss in price always comes back.
Right.
The 50% loss of funds. And people, I think, often emotionally equate the two, but the reality is that
they're different. Yeah.
once you have done that thing, once you have lost those keys, or once you
Yeah.
sold it for XRP, or once you
Yeah.
put it on an inferior loan product and that blows up, right?
Yeah.
Once you lose those sats,
You never get them back.
you are very likely not to get them back.
You never get them back.
Yeah,
Yeah.
definitely.
I mean, I've seen a lot of people said that generally whatever Bitcoin you sell, you're very unlikely to get back. I mean, the whole notion of I'm sell it and buy it back cheaper. I mean, I had a client, unnamed, but who did that. And I know, and he sold, to his credit, I think he sold in the 100, maybe high 90s. So right now he's feeling good about it. He dodged this little pullback. But I tell you what, I think he's going to wake up someday and it's going to be 120, 130, and he's going to think, "Fuck, I missed it. Yeah, I got 95 or 100, but I missed that next 20 or 30 up, and maybe he'll chase it then." You know what I mean?
There's 21 million barrels of oil. They're worth $100 a piece. Right now they're 80 cents down from $1.20.
Yeah.
You want to trade that, right?
Right.
So
It's be careful. I mean, when you sell to take a profit and think I'll get in cheaper, okay, the sell to take a profit part I get, and then when it goes down, okay, so far you're right. But the get in cheaper part, a lot of people miss that.
Yep. So
they're like, oh, it's at 85, and I know, and I actually have seen some people say, yeah, it's at 85, but it's not. I kind of want to wait for 70.
Right.
Do you know what I mean? Well, good luck. It might hit that, but it might not. And I remember this. Actually, I remember this back when we were talking about 9 and 10 and 15. I mean, I remember talking to some people.
9,000, 10.
Yeah.
9,000, 10,000, 15,000.
Yeah, people saying, well, yeah, but it's at the 15,000 effect. When it came down to 15 after the Sam Bankman-Fried thing, I was trying to convince some people, and they're like, yeah, but it's going to 10. I was like, how do you know? And what if it doesn't? So why don't you just start averaging in here?
Yeah.
And if it goes down, you can buy some more. And if it doesn't, you'll be glad you bought some, right? Yeah. No, it's going to 10. I'm going to wait. Okay. And
it doesn't matter. Like, it doesn't matter. Like, if you bought 300 or 400, 500, like, it doesn't matter.
Yeah. I mean, it would, today, does it matter if you bought it 10 or 15?
Well, sure, it matters in your net worth, obviously. But but either way, you're retired.
Yeah.
In your actual lived experience, it doesn't matter.
Right. Yes, that's correct.
Yeah. So, okay, one last question as we wrap up here. Altcoins.
Yeah.
I think that the GameStop story, the Michael Saylor MicroStrategy, now strategy story, I think, a lot of people have heard what we said. They're like, okay, Luke, okay, Larry, if I'm going to do leverage, long-term, low fixed rate, no margin. Okay, I get that, right? Okay, don't sell the cycle. Okay, I get that. But I've got this little bag of altcoins still, right? And for me, what I think a lot of people in altcoins don't understand is that Michael Saylor is the new Vitalik Buterin, right? Michael Saylor is the new Brian Armstrong, the new crypto casino. I think is going to be, and I say that like endearingly, right? Like, I think the new altcoins are these Bitcoin securities, because why on earth would somebody buy an altcoin trying to outperform Bitcoin 2x when they could just stick with a security that actually has a Bitcoin backing, is regulated, that they can buy in their retirement account that they can't do with that, right? So I think altcoins are going to have an absolute reckoning in the upcoming few years. So I'm curious, what is your encouragement to those out there that are Bitcoiners but still have a 20 or 10% diversification?
I think they're nuts. I mean, I really do. I just think they're all. I mean, look, I understand that there might actually be some technologies, and I have some friends and investors who are over in that area, and they're not stupid guys. And I understand that there will be crypto things done that will advance society and, use cases that have merit. And even Saylor has said, look, as long as it's done ethically, I'm not opposed to coins other than Bitcoin. And I have some very good friends who are Bitcoiners, but they understand that game pretty well. And so they somehow get in on these pre-mines, and they have their nose to the ground. So they really know how to find what's about to go hot, and they make money doing it. But they will all say to you, there's a certain element of luck. You got to really know what you're doing. Most people who do it lose money. And by the way, when I do it and I make money, I immediately convert it into Bitcoin. So, unless you have incredible expertise in that area and feel like you have an inside edge and feel like you can find things that others can't and understand the market in ways that others can't, I wouldn't mess around with it. I would to me, it's just gambling that makes no sense. And you're likely to end up rich or poorer for having done it. I mean, I know a few people who've made money doing it and then converted it into Bitcoin, and so be it. But they're very good at it. They know what they're doing.
Right.
And I think that the average person, it's very unlikely that they have enough skill to do that successfully. I think it's a good way to lose money. So, I mean, it's kind of ironic that the simplest and best way to get rich is to do goddamn nothing. I mean, seriously, you just buy Bitcoin and forget about it. just go live your life. I mean, like my friend George Bodine, go paint paintings, go work out, go do whatever, your God-given talents tell you should be doing, knowing that your future economic, well-being is in the most secure, growing, network in the world. And, it'll always be there. And every year you come back to it and you'll say, gosh, that's nice. I'm wealthier now, and I mean, the change, for those who aren't in this whole area, and most people listening is probably already in, but the change in mindset that occurs once you really fully understand this, it's really amazing. You just get relaxed, you feel good, I no longer worry about, can I retire? I no longer worry about, am I going to have enough money? It's just not something I worry about. And I think it's unusual. I think most people live their lives with a certain amount of just financial and economic stress, where their money is something that's always kind of weighing on them. They're scared about it. They're concerned about it. And that's no way to live your life. I mean,
most people don't know why.
And they don't know why. And they don't understand why. And I mean, keep in mind that, the only thing scarcer than Bitcoin is human time. And so, and one of the beautiful things about Bitcoin, because you don't have to manage it, you just buy it and forget about it, is you get all your time back. You don't have to go study stocks. You don't have to figure out who's a good manager. I mean, none of that shit. It just all goes away. I mean, this is like the best deal ever.
Yeah.
I mean, you got to fully understand what you got. You got to fully understand how to do it. You should self-custody. But once you've got those pieces figured out and you fully understand what you've got, go do fun shit. Go live your life. Go, make the world a better place, right?
Yeah.
That's really what it's about, So.
Well, Larry, thank you for your time.
Oh, thank you. I always enjoy talking to you.
Yeah,
so
appreciate
it's
it.
good.
And so if you're still watching this video, you probably enjoy listening to me and Larry talk all day. And so you should definitely check out his book, The Big
Thank
Print.
you.
Which is somewhere, go buy it wherever it is.
It's on Amazon.
Right.
Yeah, it's on Amazon.
But speaking of fun stuff, we got to talk about Camp Nakamoto, right?
Yes.
If you watched this far as Ramble, you probably would enjoy hanging out with us and a bunch of other awesome, high-quality Bitcoiners, some of whom you know, some of others you don't, maybe that aren't on camera, but all awesome people. Camp Nakamoto is this October
Yes.
in New Hampshire. I'm going to be there. Larry's going to be there. Natalie Brunell, Mark Moss, James Lavish, Dave Foley, Michelle Weekly, and there's lots of awesome people, BJ Dichter, many other people that we haven't yet announced yet. But Larry, share what you're excited about for.
I'm just excited to be in a different venue. New Hampshire in the fall is beautiful. I know the leaves might be turning at that time. They're, swimming in a lake, and it's, it's just going to be kind of probably some campfires, and it's just going to be kind of a really relaxed venue that I think people who attend it will really enjoy.
Awesome. You're going to make business connections. You're going to make friends. You're going to make memories. And ultimately, I think it's going to be ultimate bragging rights. Is it, hey, we were on a private island. I was on a private island with Larry LEPARD, and I went jet skiing with Lavish and had s'mores with Luke.
Are we gonna have jet skis? I didn't even know that.
Well, we're going to have lots of fun stuff. So
Okay,
lots of
cool.
fun surprises. So
Yeah.
anyway, so Larry, thank you for your time. I appreciate it.
Enjoyed it.
I look
Good to
forward
see you,
next
Luke.
time.
Yeah, thanks.
Yeah.
It is a fact of life that everything has a trade-off, and so you have lots of options before you. Let's go through some of these. One option you can do in your Bitcoin journey is that you can do nothing, and you can be all alone in your tiny little internet bubble. And of course, the upside of that is it's the easy thing to do, but the downside is that you're going to make no friends along your Bitcoin journey, and that's not going to be nearly as fun, and you're going to get rich in Bitcoin and be all alone without the kind of relationships you built here in the early days, which is right now, because you are definitely not too late to Bitcoin. Now, another option you can do is that you can go to a free meetup. You can go meet person in your local area, and that's great. Those things are wonderful, but you're not always sure about the signal to noise ratio of random people that are showing up for free at some random restaurant or some bar in your local town, right? Now, another option that people do then is, well, I'm going to go fly somewhere or drive somewhere to a big Bitcoin conference of some sort. And those things are great, but the downside is that you're going to spend thousands of dollars on a conference with thousands of people in a large city, a city that maybe is somewhere you want to go, maybe not, right? And you're going to probably be staying in a conference room most of the time, in hotels, indoors, in a big city. Nothing wrong with that, but it's just a trade-off. And you got to plan everything, all your meals, all your transport, and you may only get 5 to 10 minutes with some of your favorite Bitcoin personalities and folks, and you'll be able to meet them in that kind of corporate setting. But there's another option that most people are not aware of. And that option is that you can join Camp Nakamoto. It's totally different from any of these other options. It is an outdoor, family-friendly Bitcoin retreat coming up here in October of 2025. Absolutely gorgeous. It has a private island We're literally going to be on a private island talking about Bitcoin, making friends, connections, and having all kinds of business ideas and finding out ways to get to know each other better and hopefully grow in our Bitcoin journeys and our businesses as well as in our lives as a whole. This event is put on by the mass adoption team out of Massachusetts, really good friends of mine, and I'm happy to be helping them with organizing this event. The event is October 10th to October 13th in 2025, so it is beautifully timed, not only in a beautiful place, but with autumn colors. I mean, look at these pictures, absolutely gorgeous. You're gonna feel all kinds of FOMO for not making it to this event. Absolutely gorgeous, most beautiful place in all of New England in the most beautiful time of year with some of the best people in all of Bitcoin. Who specifically? Well, this is our guest list so far. The guest list includes, we have Natalie Brunell coming to Camp Nakamoto, as well as Mark Moss, Luke Broyles, myself, yours truly, Joe Consorti, Dave Foley of the Bitcoin Opportunity Fund, Michelle Weekly, Anders, and Matthew Liziak. We also have Tim Kotzman, surprise speakers coming along the way. We have Texas Slim coming, DJ Valerie, Adam O'Brien of Bitcoin Well, BJ Dichter, and Larry LEPARD, as well as James Lavis. We have an awesome guest lineup coming, and really all these people are coming because this is the exact kind of event that we all want to have. Something that's a lot more slowed down, a lot more relational and friendly, instead of a much more corporate go kind of environment, right? This is the kind of event, if you're wanting to slow down, if you're wanting to have all kinds of fun activities with these individuals, instead of just meeting them in the hallway and saying hi and shaking their hand, getting a quick selfie. If you actually want to make friendships with fellow Bitcoiners, whether you know them or not, recognize them or not, awesome opportunities abound at Camp Nakamoto. There's going to be Twilight Foliage Cocktail Hour Cruise. There's going to be Bitcoin Road, Arts and Crafts, Lightning, Karaoke Event Night, Bonfire Night, Color War, all kinds of fun things. You can reserve your spot information. I will get to here in just a moment. But the point here is that this is not your typical meetup. This is not your typical conference, okay? You're not going to leave this event having met other people. You're going to leave this event having many friends that you made along the way. Relationships you're probably going to carry with you into the coming years to come, right? It's going to be 4 days, right? The same dates I mentioned before in mid-October of 2025. So it's going to be beautiful, and it's going to be multiple days where you're going to have with these individuals, right? Unlike a typical conference where you're spending thousands of dollars to be in an indoor room in a stuffy environment with a lot of people, it's going to be outside, outdoors, sharing moments, sharing memories with new friends. Also, everything's planned for you, right? This is something that I think a lot of people, myself included, appreciate, is that you don't have to deal with the logistics. Your lodging is covered, your food is covered, and your activities are planned for you. It's going to be really fun. You will have options, no matter if you're someone that's super physical and outdoors, or for somebody that wants to take it a little bit slow and relax. This event is family friendly. A lot of people are bringing their friends, their families, their neighbors, whomever it is, that person in their life that, hey, I want to orange pill that person in my life, and they're sick of me sending them video podcasts. Let's do something in person and have a good time in the process, right? So this is a perfect kind of event. If you're looking to bring loved ones or business partners, it's going to be a great kind of event. Also, it's going to be especially good for business partners and business minded folks, because we're going to have all kinds of masterminds and discussions of everyone sharing advice, giving feedback, pitches, whatever it is. That kind of stuff, is going to be something that we're all trying to grow as well. And so we would love to have you join us and participate in that, because we want to see as many Bitcoin people and Bitcoin businesses succeed as possible. Additionally, the special guests, many of which I already named. However, there are surprise guests that are not yet on this list that you are going to definitely want to make sure that you make it to see, as well as virtual surprise guests, which again, you will definitely want to make sure you do not miss. Okay, these will be massive FOMO kinds of things, right? So no matter if you're into Bitcoin, entrepreneurship, trying to merge them all, or if you're just trying to improve your life and get life advice from people, this is going to be an awesome time. And again, we're trying to build friendships. So most of all, of course, you're going to have bragging rights, right? In a few years, when Bitcoin's millions of dollars, you're going to be saying, yeah, back when Bitcoin was under 5 million bucks, I spent a few days with so-and-so, hiked with so-and-so, and had s'mores with so-and-so around a fire, with a glass of whiskey or wine, or whatever it is, right? It's going to be an awesome event, unlike any other kind of event in Bitcoin that you've ever seen or been to before. If you want information on how to get the best deal to come to Lake Winnipesaukee for Camp Nakamoto in October of this year, information on how to get there, dates, times, questions you have, if you want information on all these kinds of things, feel free to contact me via the information on the screen here. Here's the phone number. Text that phone number, Camp Nakamoto details, as well as your name, email, and what questions you specifically have. Happy to answer those questions and keep you up to date with the most current information, as well as the best discounts on your tickets. Information also is in the description below this video. If you can't text me for whatever reason or don't want to, feel free to go to the information in the link in the description below. Okay, I want to clarify, spots are limited. Okay, most people watching this video, if they wanted to try to sign up, would not be able to sign up, right? This is not because we're trying to force people out. We kept tickets very cheap for a very long period of time because we want as many people to come as possibly. We want all the plebs to come, but the reality is that this is an island, this is a private island, and so you can't fit 1,000 people on the island. In fact, there's probably going to be less than 100 people on the island, and the reality is that many of the people on the island already are claimed being speakers. So spots are very limited. Highly encourage you to get your tickets as soon as possible before Bitcoin price continues to skyrocket and demand for this event continues to grow. There are options. Not everyone wants to be a big outdoorsy kind of person. You have the opportunity to be in a hotel on the mainland and then ferry out to the island every day. You have the option to camp, and of course, which is what I'm going to do, I'm going to be in a log cabin because I think that's so cool to be on a log cabin in the middle of an island in the middle of one of the most beautiful places in America. I want to clarify, there are less than 10 tickets available at the current price, right? Tickets probably will be available after that. However, there are only a few tickets left at the current price point, so highly encourage you to spend your sats on something that is going to stay with you forever. You know, not a new Lambo, but memories with Bitcoiners, lessons, life lessons, and relationships that you'll get to carry along with you for hopefully the rest of your life. So do not delay. And if you do delay in buying tickets, you're delaying at your own risk. So highly would encourage you to text the phone number on the screen, reach out, let's have a conversation, let's answer your questions, let's get you signed up to join us on the island before spots sell out or before the cost for those spots runs out. But the point is, whatever you do, no matter what trade-off you decide to have, highly encourage you to make friends in Bitcoin. And if you're somebody that wants to have friends in Bitcoin in a high signal, low noise kind of event that's outdoors in a family-friendly kind of setting, highly encourage you to reach out to the phone number on the screen here and join us at Camp Nakamoto here in October of 2025. You are definitely not going to regret it. Thank you, everyone.